This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Don't let the rally fool you. The Dow Jones Industrial Average powered higher, but it was all because of one stock. And a closer look shows some underlying market weakness.
Proud to be gay. And with those words, Fortune 500 CEO Tim Cook of Apple may have changed the business world.
Stronger than expected. Economic growth exceeded expectations in the third quarter, but can the momentum continue? We have all that and more tonight on Nightly Business Report for Thursday, October 30th.
Good evening, everyone, and welcome. One day after the Federal Reserve said the U.S. economy was strong enough for the central bank to end its latest bond-buying stimulus program, the Dow rallied, and how. The blue chips zoomed to another triple-digit gain. Powering the move today, strong corporate earnings, most notably from the credit card giant Visa. It said, simply enough, that more people charged more on their cards. Equals more money for them. Also helping better than expected economic growth last quarter and initial jobless claims. They hover now around 14-year lows. Here's how things looked at the closing bell. The Dow up a big 221 points, but the Nasdaq was only up about 17, and the S&P 500 rose a relatively modest 12 1/3 points. Bob Bazzani now with more on the Dow's big rally despite some underlying weakness in the markets. He reports from the New York Stock Exchange.
It was a strange day with the Dow soaring while the S&P and Nasdaq were only up fractionally. What's up with that? Well, what happened was Visa, a Dow component, reported terrific earnings and guidance, and it was up about 10%. Because the Dow is a price-weighted index, most of the gain in the Dow, about 160 of the 221-point gain, was due to Visa. Unfortunately, the rest of the market was not nearly as strong. There were only 3 stocks advancing for every 2 declining at the New York Stock Exchange, and the sector with the biggest gain was utilities, which closed at an historic high. But utilities are hardly a market leader. Elsewhere, 2 big sectors had terrible days, tech and energy. Semiconductors in particular had a bad day, down several percentage points. A smaller chip firm, Intersil, reported disappointing earnings and talked about an inventory correction in the computing market. Oil dropped again today, and big oil got hit, particularly oil service names like Nabors and National Oilwell Varco. Exploration and production names like Apache were also weak. The bottom line, it's good news that the markets have moved up, even as oil has dropped. It's also impressive that the market hasn't sold off, because the Fed was fairly optimistic in its assessment of the U.S. economy. Now, in the past, stocks might have sold off due to fears that higher interest rates might be coming, but that hasn't happened yet. Maybe the market is finally shedding some of its fears of higher rates down the road. For Nightly Business Report, I'm Bob Bassani at the New York Stock Exchange.
More now on that strong report on the economy's growth in the third quarter. The gross domestic product grew at a rate of 3.5% during the summer months, thanks to big gains in business spending, sales of U.S. exports, and more military spending. Steve Leisman breaks down the first look at the health of the U.S. economy and what might be ahead.
Maybe Janet Yellen and the Fed knew something. Some eyebrows were raised Wednesday when the Federal Reserve ended quantitative easing and spoke confidently about the U.S. economic recovery in its policy statement, citing solid job gains. But today, the government announced U.S. job growth in the third quarter topped expectations with a 3.5% rise in gross domestic product. Coming on the back of a strong second quarter, it was the best 6-month gain for the U.S. economy since the Great Recession ended. 4 of the past 5 quarters have seen growth north of 3%, and that to some means the Fed needs to move even faster.
To me, the trend is sustainable. Clearly, the economy does not need excessive monetary policy, but we're going to have it. We're going to have this Fed continuing to pursue extraordinary accommodation until it's obvious that inflation or inflation pressures rise, and they're not there yet.
Yet there were details in the GDP report that raised questions about whether the strong numbers could continue. A surge in national defense spending seems unlikely to repeat. Trade added 1.3 percentage points to the 3.5% number, but a strong dollar could weaken U.S. exports. And consumer spending growth was middling in the third quarter. It will have to accelerate in the Christmas season if the rosy economic story will maintain its shine. And all of this with economic weakness overseas, and with the Fed's next move all agree to tighten monetary policy, even though that move may not happen until well into next year. So attention now turns to data for the fourth quarter, because in this post-crisis economic world, even when you have a number above expectations, confidence runs very low. And a new round of pessimism is just one data point away. For Nightly Business Report, I'm Steve Leisman.
Well, we told you about Visa's strong earnings and outlook. Not to be outdone, MasterCard had a pretty strong third quarter. Shares of the nation's #2 credit card and debit card processor charged more than 9% higher today after netting more than $1 billion in profit as consumers spend more.
It was just the opposite story at Citigroup, and surprising news for the bank's investors tonight. After the market closed, the bank sharply lowered its third quarter profits. These are profits that it reported just 2 weeks ago. Citi now says it earned 88 cents a share, not the $1.07 as originally reported. Revenue was lowered from $3.4 billion to $2.8 billion. The bank blames the revision on a massive $600 million increase in legal fees for regulatory inquiries and investigations. Citigroup shares initially fell as much as 2.5% in after-hours trading. An historic day for corporate America as Apple CEO Tim Cook became the highest-profile chief executive ever to come out proclaiming in a published essay that he's proud to be gay. So what does this mean for Cook and the company he leads? Josh Lipton has more.
Apple's CEO Tim Cook values his privacy and doesn't typically look to draw attention to himself.
Great to see you.
But today, Cook made a very personal and public decision. In an op-ed, Cook wrote, "While I have never denied my sexuality, I haven't publicly acknowledged it either until now. So let me be clear, I'm proud to be gay, and I consider being gay among the greatest gifts God has given me." Apple's board of directors applauded Cook's statement, a sign of the confidence they have in Cook as chief executive. Others also see the business implications of the first CEO of a Fortune 500 company openly declaring his sexual orientation.
60% of his profits come from outside the U.S. 78 countries around the world, it's still illegal to be gay, and in a third of those countries, punishable by death. So Singapore 2 days ago just reiterated that they were not going to take away their anti-gay law. So now Tim Cook is openly, visibly out. What's Singapore going to say the next time he comes?
It's an open question how the rest of the world does in fact react to Cook's op-ed. Still, whatever the reaction, this was a historic day when the CEO of the world's most valuable company said, publicly and proudly, that he's a gay man. So why make such a statement now? Cook says that he's looking to make a difference. If hearing that the CEO of Apple is gay helps people struggling to come to terms with who they are, then it's worth the trade-off, he says, with his own privacy. Cook's op-ed wasn't a total surprise, though. In fact, just this week, Cook delivered a speech in which he called on his native state of Alabama to do more when it comes to gay rights.
As a state, we took too long to take steps toward equality, and once we began, our progress was too slow. Too slow on equality for African Americans. Too slow on interracial marriage, which was only legalized 14 years ago. And still too slow on equality for the LGBT community.
Cook writes in his op-ed that he'll continue to fight for equality for all people until, he says, his toes point up. For Nightly Business Report, I'm Josh Lipton in Cupertino, California.
Let's turn now to our guests to get their takes on what Tim Cook's personal disclosure will mean for the corporate world. Bill George is a former CEO of Medtronic and professor of management at Harvard Business School, and Kara Swisher is co-executive editor at Recode, a leading tech website. Welcome to you both. Let me begin with you. I spoke early today with Kara, by the way, and I asked her whether this was a kind of Jackie Robinson moment. But I want to pose a different kind of question to you, Bill, and that is, why has it taken so long? Why have CEOs or board members been so hesitant to be open about their sexuality?
I think it's very disappointing. You know, in Minnesota, we had a big same-sex amendment. Was going to constitutionally ban this for all time. And a group of CEOs we organized in Minnesota who were willing to speak out and put their companies on the line, like Ken Powell at General Mills. So I think it's been way too long, Tyler, and our whole society. I mean, actually, the business community in many ways is leading the way ahead of sports.
But how can you say that, Bill, if Mr. Cook is the first of the Fortune 500 or the first of the S&P 500 CEOs to acknowledge his sexuality? How can that be ahead of the game?
Well, I can say to you that Lord John Brown, who I knew well and served on a board with for 5 years, has written a brilliant book called The Glass Closet, and he did hold back, and it made me weep when I read it. But I think more and more the encouragement's there, and the acceptance is there, and I think within the business community, there's wide acceptance today within the corporate world and benefits for same-sex partners. And so I think we are actually, Tyler, moving ahead. And Tim's a very humble, modest guy, and he's not one to say, look at me. So this is moving to me when he says, you know, this is my brick. We're building this brick by brick. And I actually think the momentum is really there. And when even Pope Francis could call the bishops together and put a statement out, it's moving, and I'm encouraged. My wife Penny and I have been big supporters of trying to have equality for everyone and no discrimination.
Okay, good, Bill. Let me get Kara into this conversation. You know, Kara, in Silicon Valley and in the tech industry, the attitudes toward gay rights, there's much more progressive. But you just heard in the report a comment by one of the people in the story saying that, you know, in other countries, in Singapore was the example he gave, there are a lot of laws against gay rights, and that this will be difficult for Tim Cook to deal with the businesses overseas. What are your thoughts on that?
Well, it's not laws against gay rights. It's laws against gays. They're killing them in certain countries. I mean, it's not just getting rights to get married or anything like that. You know, I think he probably put this into the calculation, and it doesn't matter. Someone's got to be a leader, and you know, he took him a while to do it, but he did it. He's now a big leader of this in this issue. He is the most prominent executive in the world, one of them, and he's coming out and saying, "I'm proud of what I am." And you know, I think he's just made the decision that the rest of the world has got to get used to him rather than the other way around.
Kara, what was the reaction in Silicon Valley, a place that you know so well? You know probably more people out there than any single person. What was the reaction today?
It's positive, uniformly positive. I mean, I think nobody, you know, there was some back and forth on Twitter with crazy people, but in general, the people in Silicon Valley have always been very progressive in issues of gay rights compared to most industries. Even though there haven't been out CEOs or out VCs or things like that, there's been a relative, tolerance around gay issues. And obviously, San Francisco, the Bay Area, is one of the areas that has been most tolerant around this country, at least.
Well, let me ask you the same question, Bill. I mean, how does this admission by Tim Cook change the conversation in corporate boardrooms towards gays in management?
I think it's really going to open things up and legitimize the fact there are lots of gays. We all have gays around us all the time, whether they're open or not, and allow people to be themselves. My writing on True North, it's the whole idea you've got to be yourself. And having something like don't ask, don't tell, or hiding who you are is the antithesis of being an authentic leader. So I think it's going to open up corporations in many ways where people haven't felt comfortable. And to recognize we all have differences. And honestly speaking, any form of discrimination, including against people under sexual preference, is legitimizing all forms of discrimination. So I think this is the last major one to fall, and it's moving fast, and I'm excited to see it finally going this way. So we can accept people for who they are.
Kara, does this disclosure by Tim, Mr. Cook, does it open up for LGBT individuals who might otherwise have held back, not gone for the brass ring out of some fear? Does it now make them feel more liberated that they can, in fact, compete in the same way that straight people do?
Well, there's been gay CEOs in history, and there's been gay everything in history. It's just been hidden. I think it just allows you to be yourself. And like, there's lots of stories of not talking about your spouse or your partner and your colleagues being able to, not being able to reveal yourself totally. Now, the workplace, you don't do a lot of personal stuff, but there is a personal element to the workplace. And I think if people know a little bit more about your life and you become more of a human being, you're a better leader. And it's a lie when you are closeted. It just is. And so anytime you do, when you're in the closet and you're not fully revealing yourself, you're not being as good a leader as you can. And I think probably Cook people at Apple did know about this, his friends did know about this, but this puts a real stake in the ground in terms of the next step is that we all have to talk about it, and it's fine. And I think people below Tim Cook, not at Apple, because I think Apple's a hugely tolerant place, but in other companies can now look up and say, why am I doing this, and what's the cost to me for doing this?
Carol, thanks very much. Bill, one final very quick thought, Bill.
6 years ago, I wrote the first case ever at Harvard Business School. I was shocked there were never any cases about people coming out, about a woman who came out at Verizon. It's interesting that, it encouraged people to be who they were. And we just got to, Tyler, we just got to encourage people in all ways to be who they are. And I think this is just an important step that we're moving in the right direction. Finally, it's too late.
Great conversation. Bill George of Harvard Business School, Kara Swisher at Recode. Thanks a lot.
And still ahead on the program, how Kroger, a major player in the increasingly competitive grocery business, has defied the odds and pushed back the competition. That story is next. While Walmart being the nation's biggest seller of groceries, supermarket chain Kroger is eating its lunch, posting 43 straight quarters of sales growth. How does Kroger do it? Sarah Eisen has more.
8 million customers per day, more than 2,600 stores, and nearly $100 billion in annual sales. Kroger has defied the odds and the competition to become America's second biggest grocer behind Walmart. How? It was early to bring in natural and organic food, and it lowered prices to match Walmart and compete with Whole Foods.
It's really our associates are doing it, and our associates do a great job every day of improving our customers' experience. And they do that in terms of the shopping, the products that we offer. And when you look at all those things together, plus a great price, it's just really done a great job.
The stock has more than doubled in the last year, driven by 43 straight quarters of sales growth. CEO Rodney McMullen is investing in new stores and e-commerce to keep the momentum going and stay ahead of Amazon Fresh and others. Kroger is also benefiting from a recovering consumer and cheaper gas prices at the pump.
If you look at from a digital standpoint, when we merged with Harris Teeter, they had a very strong click and collect operation that we're now testing in a store here in Cincinnati, and we'll start rolling that out. We merged with a company called VitaCost, where you can deliver to home. And we have an app that's one of the best-in-class apps that's having 50 to 100% growth.
Another key that distinguishes Kroger is its own soon-to-be billion-dollar Simple Truth brand of organic products. It is set to double over the next 5 years, according to McMullen, because the entire consumer shift to healthy, better-for-you foods is here to stay. For Nightly Business Report, I'm Sarah Eisen.
No caffeine buzz for shares of Starbucks late today, and that is where we begin tonight's market focus. After the closing bell, shares of the world's biggest coffee chain fell on disappointing fourth quarter sales, and the company says the outlook for the first quarter isn't much better. Starbucks blames softer traffic. After the bell, shares of Starbucks initially tumbled about 5%. You see it on the chart right there at one point. During the regular session, the stock rose 1% to 77.32. LinkedIn beat on the top and bottom lines. The career-focused social network saw its membership rise in the last quarter above what analysts expected, but the company gave a lackluster fourth quarter forecast. Shares were volatile after hours. There you see it before the close. LinkedIn almost 2% higher at 202.90. Cigna hiked its earnings outlook for the year after it reported strong results. The health insurer said its performance driven by growth in premiums and fees as it added new customers. And the CEO says he expects that growth to continue. Shares popped $3.10 to 97.10.
The New York Times says higher circulation revenue helped it narrow its loss in the third quarter, but advertising sales continue to decline. The paper is also projecting a further decline in those ad sales for the current quarter. That disappointed investors. Shares fell about 5% to $12.74. Avon reported a profit for its third quarter that topped estimates, but revenue came in below expectations. The cosmetic firm blamed weak foreign exchange rates and higher supply chain costs. Shares tumbled 9% to $9.97. Two very different companies made their Wall Street debuts today. Boot Barn, this is a Western footwear and apparel company, priced 5 million shares at $16 apiece, raising $80 million. Fifth Street Asset Management, this is a credit-focused asset manager, sold 6 million shares at $17 each. But look at how the shares turned out. Boot Barn rose 9% to $17.45. Fifth Street tumbled 21% to $13.37. And shares of Trulia fell today as investors reacted to a disappointing quarterly report. The real estate website operator reported a loss that met estimates, but sales came in weaker than forecast. Shares fell slightly to $44.34. Zillow, which will acquire Trulia, also saw its shares fall today, down 1%.
The real estate watchers wondered why Google Capital, an equity fund backed by Google, put $50 million into auction.com last March. Today, the answer was revealed, and it's all about the speed of information. Diana Olick has the story.
It is the power of the very public search. Google using your search data to determine home sales. Put it together with proprietary data from auction.com, and you get not a forecast, but a nowcast.
This nowcast is about as close to real-time data as you can get. We're looking at ongoing real-time search traffic.
It's the brainchild of Google's chief economist who says that by using Google search terms and then overlaying them onto auction sales data, they can predict monthly home sales numbers about a month faster than the realtors. And why is that so important? Because knowledge is power. For buyers, sellers, investors, government, even real estate agents, knowing what's going on behind the closed doors of the housing market can translate into big money.
Last and final call for $84,000.
Auction does a very small fraction of the nation's home sales, but they do auctions almost every day. The realtors are involved with a much larger share of home sales. Auction says they have tested the model going back 10 years, and they claim they're very close to the realtor numbers,
Lawrenceville, Georgia,
and usually beat consensus forecasts.
It's not a question of auction.com having more data. It's a question of auction.com having more timely data.
The realtors did not want to go on camera, but told us they will keep an eye on it, adding, "We stick by our data and believe it is most representative of the market." A market that has always been driven by the search, and never more so than today. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, King James is back in Cleveland, and with that, a one-man economic stimulus plan. What his return means to the local economy. It's the first lawsuit of its kind related to the Ebola crisis. A California law firm is suing consumer products giant Kimberly-Clark, claiming it committed fraud by marketing and selling some surgical gowns as protection against Ebola. The class action suit says the gowns failed industry tests and don't meet protection standards against the disease, putting patients and healthcare workers at risk. The firm is asking for more than $500 million in damages. Kimberly-Clark declined to comment on the suit.
Baseball's World Series is now over, and the new NBA season has begun. And tonight, with the return of superstar LeBron James, a new era begins for the Cleveland Cavaliers and for the city's beaten-down economy. So how much does the return of the King James mean for the city? Morgan Brennan has more from Cleveland.
The King is back in Cleveland. Tonight, the four-time MVP LeBron James will take the court in his triumphant return as a Cleveland Cavalier.
I am going to be extremely excited and happy to be back on this floor. It's going to be a special moment, you know, and we can't take it for granted. You don't get moments like this. You know, they don't come around every day.
The city that angrily mourned when the basketball star left for the Miami Heat 4 years ago is enthusiastically welcoming him home. And it's not just fans.
They'll sell out, I'm sure, every single game. And so that creates jobs, but it also creates jobs in bars and restaurants and hotels because their numbers go up. So some of it directly we're getting money. And then there's all the ripple effect. There's all the spin-off effect. And that's harder to calculate, but it's a significant amount of money.
Cleveland businesses are already seeing an impact. Hotels are receiving more advanced reservations, and restaurants are booked solid.
We're definitely starting to see an uptake in traffic from this. Previously on Cavs home games, we'd have a good showing, and people were definitely coming to the games. But now these games really turn into more of a social event.
Economists project the effect could add anywhere from $50 million to $500 million to the local economy.
Ticket prices for home games have surged, the highest in the league on the secondary market. And both Cavs and James merchandise have spiked, becoming the top selling items for the entire NBA.
The spotlight of the world is on Cleveland is something as well. That's something that money can't buy, and it's helping to change the dialogue about our city.
Now the only question is, can LeBron and his new teammates deliver?
Cleveland, #1.
For Nightly Business Report, I'm Morgan Brennan in Cleveland, Ohio.
And that is Nightly Business Report for tonight. Thanks so much for watching. I'm Susie Garib.
Cleveland's own Susie Garib. I'm Tyler Mathisen. Have a great evening, everybody. We'll see you tomorrow.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garib with a Nightly Business Report news brief. The U.S. economy grew at a rate of 3.5% during the summer months, thanks to big gains in business spending, strong sales of U.S. exports, and more military spending. That solid growth and another round of strong earnings, led by shares of credit card giant Visa shooting up more than 10%, helped the blue chips rally today. The Dow surged 221 points. The Nasdaq added about 17. The S&P rose 12 points. Apple CEO Tim Cook became the highest-profile chief executive ever to come out proclaiming in a published essay that he's proud to be gay. And a new survey on the jobs Americans fear the most includes kindergarten teacher, microbiologist, and politician. Be sure to tune in to Nightly Business Report right here on your public television station.